Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everyone. Welcome to this Wednesday, July 12th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, we're going to talk about this rally in oil. Got some numbers from OPEC we're going to discuss. Ulta had a breakdown. Tesla had a rebound. OCUL looks like that is our disaster stock of the day. We got earnings from OZRK and Fastenal. We're going to recap Amazon Prime Day, Square hitting all-time highs, and of course we'll take your questions in the chat. Our two guests for today are Rachel Shasha. She's a trader and blogger at Sassy Options. She's first up at 8:15, and then at 8:35 we're going to be joined by Morad Askar, aka Futures Trader 71. Joel, how's it going in the market today?
S&P futures are trading up 3 points here, 27.50. Big number up top, current high 29.25. We have Thursdays and Mondays high right at 24.30 area as well. So that is the key to continued upside in the market. We have crude into green here by 66 cents off its high of the day. Current trade 45.70. We're looking at the low of the session, kind of coming up on it at 45.61. Gold and silver in the green as well. Gold up by $1.90, 12.1660. Noticed a few higher lows in the gold market. Silver up by 3 cents at 15.78. Let's bring in Dennis here on this Wednesday morning. S&Ps are in the green, Dennis.
I'm cranky today.
You're cranky today? How come?
Yeah, tired. Not enough sleep. 2 kids, comboed up with trying to trade at 4 in the morning. I was silly, just tired.
All right. Well, we will, by the end of the show.
Need a vacation, which I never have.
Well, you will be, by the end of the show, you will be fired up to do some trading. So let's just talk about some morning movers.
Yeah, we got a few here. I mean, oil is moving here this morning. We had the number last night come out at 4:30, just after the bell. And Spencer, do you have that oil number for us? I'm throwing you under the bus.
Yeah, I have it. Give me 3 seconds to pull it up, but I do have it.
1.
Okay, there, I got it. Look at that.
Hey,
okay,
perfect.
OPEC, yeah, 3 seconds. That's what I said. We got numbers after the bell yesterday. OPEC output up 1.4% to 32.61 million barrels a day. In June, they do say that they see global oil growth for the fiscal year or for the year unchanged at 1.27 million barrels per day. They see the global oil growth for 18 at about 1.26 million barrels per day. Non-OPEC oil supply growth was revised down to 800,000 barrels per day.
You got a good pop off oil on that number, and oils. And I look at the USO, and the USO is trading up over 9.43, up over 1.5%, still up 1.3% here. Joel, you can look at the crude futures there too. Big pop there in oil and a lot of your oil stocks. That's kind of your movers today. When I'm looking at my scanner, my up scanner at least, it is littered with oil stocks.
Crude, you can see the pop here. Basis the 15-minute chart really had nothing at 46 except 46 itself being a whole number. But interesting here, I mean, you're starting to leak here. You're up 62 cents, but you're a nickel off the low of the session at 45.61. So we'll see if we can hold on to those gains. Yesterday's high in crude, if you want to look for a gap fill, well, we've already filled that. 45.81 was yesterday's high. Can't give you anything real good until the close of 45.04, but I believe we have another number coming out at 10:30 this morning, so we'll see if that can get another pop here in the crude oil futures.
A lot of the majors are right on support. ExxonMobil, we talked about that $80 forever, bounced off it 2 days ago. It's up at 81 here this morning, getting a lift off of the good crude numbers there. Chevron has been hanging out at this support level around 102 and change. Bounced off it 2 days ago again, is trading up here this morning. ConocoPhillips has been, did take out its support back from June, but not by much, and it's back up above it now. So you got the three majors really trying to hold on to their support levels. If they breach them, I'm going to be concerned here, but I guess as long as oil's going up, that's unlikely to happen.
Yeah, is this ExxonMobil getting attractive to you from a long-term perspective? Maybe with that.
You know, partially. I played it once. You know, obviously my investment portfolio. I bought it back when everybody hated it. Try to go grab that price right in 2015. And when it got under $70, I think I bought it at 68. And then I sold it at 90 a year and a half later. And my reasoning there was I thought it was overdone in 2015 when it got down to 68. And then it rallied up, and it rallied up over $90. I'm like, well, oil's still in the 40s. And oil, when it was 90 last time, ExxonMobil was, you know, when ExxonMobil was 90 last time, oil was in the 80s. I'm like, I don't like the value of it compared to oil as much anymore at 90. And I'll say the same thing right now. You know, down at 70, yes, I think I would strike on ExxonMobil, and I don't know if it's going to get there, but you know, is there value, some value here? Probably. If oil starts to rally, there's value big time. It really depends on where oil's going to go. But if you think oil's going back down into the 30s, you're not going to be happy that you bought ExxonMobil 81. So basically, an ExxonMobil investment all depends on where you think oil's going.
All right, $80. That's been a long-term support level. Haven't been below 80 here since early in 2016. Remember what the oil market did then. But really, if you look at it, this is a weekly chart here. Going back to, well, you broke down at the beginning of 2017, but basically since February, it's been trade the range, 80 to 84 here. So we'll see if the bottom of that range can hold up.
I want to talk about Tesla. I know we talk about it every day, but we got to talk about it again because it did have a big update there. Both me and Nick, when we were talking about it, Nick was saying, you know, if you had to put a bullet, you know, put a gun to his head, he'd go long here. Not that, but he was kind of wishy-washy on a little bit. I kind of liked it. I said I liked it above 300 as long as the 300 level held. And obviously I played it once in there. I wish I would have bought it again yesterday, saying that I liked it on the show when it was down at 314. Man, 329 here, up 15 points now from where I liked it just yesterday at this same time.
Let's look at the pre-market trading here in Tesla. Currently trading up $2.38. It's 329.60. We have filled the gap. We had a gap on one of those big down days, so it easily took care of that when it cleared 326.33. Now you're just getting in a real vacuum area here, folks. Like really, if you're short, just saying, hold on, because there's not a lot in here. I shouldn't say hold on. Look for cover. Because,
long or short, there's not much in there now.
No.
I mean, really, you look at this, it's in the middle of nowhere. So at 329, I'm sitting on my hands. I think it's back under 320. I think you now have, you know, the bottom guys saying, hey, I want this thing as it gets closer to 300. But, you know, there's some error here. Am I going to buy it at 329? And, you know, you kind of almost got to give it down to that 300. That's a lot to give. So I think it's gone, you know, a little bit too far for me now. But if it's pulled back into the teens again, which I don't know if you're going to get a shot. I like my 2-day move. I think it could go up here again today. It already is up a couple bucks. I just don't feel like chasing it, though.
303.13 was the low of the move. And just, you know, looking at the dailies here, going back to the middle of the May, you had a series of lows in that area, 0680, 0348, 0540. So it found support in the same area as it did back in middle May and or kind of towards the end of May here. You can figure a 50% retracement here if you're looking for a target on the upside.
Yeah, that's not a bad idea.
Let's see here.
Probably take you to that 345 high back on the 5th.
Exactly, very good. Very wow! Did you do
the math?
Did you do the math on that, or did you just? Say,
I guestimated it looking at the chart.
It is because I did. The high was basically 87. The low was 03. 84 divided by 2, 42. You add the 3. 345, Dennis. You are not cranky this morning. You're doing good.
I'm cranky. I'm just, and I'm tired, but I still can do my air math.
100,000 shares have traded so far in Tesla
It's
this morning.
active. And it's a $300 stock, too. You know, when you see 100,000 shares of a $32 stock, it's active. $300 stock, there's some money still being thrown around Tesla. It is active all the time. Pre-market, after hours, anytime you can get a fairly tight market for that $300 Tesla stock.
Wow.
It's active.
You sure is.
OCUL, your disaster stock of the day here. Stock trade down 31% here in the pre-market. I always like, when I don't follow a company closely, you can always go to Adam Fierstein's account on Twitter, and you can always get the scoop there when you're talking the biotechs there. And he was talking, and actually he had warned about this OCUL potentially getting rejected there a while ago. And he was right. I mean, he was right here, and obviously stock coming down. Nobody better to follow than Adam Fierstein. Well, I guess he's not at the street anymore. He's where is he now, Spencer?
Stat news. Stat news.
Okay, sad news. So anyway, so the FDA fully rejects OCUL, their eye drug Dextenza. So they were actually looking. It's kind of funny. They were, and Adam was tweeting this yesterday. They were looking to get an extension because they were going to make the ruling, and they didn't give him an extension. They just gave him a flat-out rejection. So here you are. This is what happens when your one main drug getting rejected. Stock comes down. Now they will probably. I don't know if this is dead in the water because I think that they will probably try to rectify whatever is the problem here and try to apply again. I would imagine.
Not much to say. This thing is always on stock tweets, going up or down. A stock that was over $11.50 back in the middle of June, now at the $5 level. Not much to say. $4.95 is your pre-market low, and that's been holding up here over the last several brackets. So at least it looks like someone's trying to bring in some stock here at the $5 level. If I was short, I'd be joining that bid as well, trying to bring something in. August low, this is back in the second week of August. You had a low at 404, but looks like you're finding buyers here at $5.
Yeah, I like that $4 level a little bit better because it really bottomed back, and we're going to 2016. We got to 427, 407 in July and August 2016. I kind of, if it would get that low, but it doesn't appear to be wanting to get down there. I mean, it's traded quite a bit of volume already here this morning, 239,000. Does seem to be somebody defending the $5 level, so we'll have to see if it does cut through there. Then, it's wishy-washy through that. But $5 appears to be trying to hold at least in the pre-market.
All right, S&P's hanging in there, up 375, 28.25. Crude trying to get a bounce off the low, still up 70 cents.
Fastenal earnings, FAST, that stock actually really moving up, and Dr. J joking Fastenal moving fast. It is. It's moving up quickly here in the pre-market. 43.59 is where it closed. I've been talking about putting Fastenal in my investment portfolio. I was hoping it would get down to 40. I was actually hoping it would miss on this earnings. I had it written down. If it missed, that I was maybe going to try to pop this one in my investment portfolio under $40. Obviously not going to be the case. It's going the other way here this morning. Spencer, give us the details for the Fastenal quarter.
Q2 EPS 52 cents versus a 50-cent estimate, so a beat by 2 cents on the EPS. Sales of $1.122 versus $1.11 billion for the quarter. So they beat that as well. So they beat on the sales, they beat on the EPS.
I believe they also announced a buyback last night, didn't they? Do you have that? That came out actually before the earnings report, but I believe that was I saw that go by.
I didn't see that, but I believe you.
I'm pretty sure. I thought I saw it, unless I dreamt it up last night. I told you I didn't sleep well, but I'm pretty sure I saw that go by. So I think there is a buyback here too. So Fastenal up 7.5% here this morning. Hard to chase it up here now. I mean, this thing is, this is a big move. Stock has been, not favored here by the street for quite a while here now. You're getting it all back, 3.5 points in one day. I think you'll find some sellers up here.
But is the pre-market high going to be the high of the day? 47.
No, it's still digesting, so
yeah.
maybe we guys got to wait.
46.90 is the current trade. 7.27 is your pre-market high. Pretty easy level to give you here. After this thing broke down, it must have been its last earnings report. It made a high of that day at 48.17. That gets you into the gap area up to 50. So if, in fact, we can take out that pre-market high, 47.27, which we're only 40 cents away. I'd look at that 48.17 as another potential target. Of course, this thing is pretty volatile, so you could have an expanded range day, but above 48, then you're getting into that gap area as well.
8:15, we go to our first guest.
We are. You're on the ball today, Dennis. See, you're with it. You're with it.
Tired.
You're tired, but you're with it. We're gonna go and take our first break of the day and grab Rachel Shasha. She's a trader. You can find her at Sassy Options is her website. So we'll be right back with Rachel. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elkanin and Dennis Dick. We're on the line with Rachel Shasha. She is the founder and blogger at Sassy Options. That's where she trades and writes about her trades. Rachel, how's it going today?
Great. How's it going?
It's going great. Like you said when I just called you, markets are looking good. So, take us through. I mean, it's been a while since we spoke. So, take us through what the last few months have been like for your trade. What have you been doing with regards to, or how have you been trading with regards to the overall political climate we're in right now? Has that impacted your trading at all? Do you have a different strategy? Take us through the last few months of your trading, broadly speaking.
Sure. So I'm a directional trader, so basically I'm mostly week to week. There's a couple swings in there, but mostly week to week, and I also buy only calls or puts. So mostly really calls because of the market. So that's my strategy, and it's been great. Honestly, this has been a phenomenal year because even when the market is flat, they'll go through periods of a few weeks of doing nothing. A lot of stocks move, and the fun stocks too, like the ones that move big, the momentum stocks, the FANG stocks, the semis now are in play, things like that. So it's been good. I've just been, trying to buy every dip that comes and then selling it when it rips, and then, rinse and repeat.
Any specific sectors or technical patterns you're looking for?
The sectors are the ones I'm sure you've noticed, it just keeps rotating. So it's first, most of the sector that I've been using is, I would say, or playing with is like the things and tech. A lot of the semis. So not like AMZ or MU, because with options that, I really want them to have enough value where I can get 3 times my money or 4 times my money. Where it's harder with AMD and MU and stuff like that, but things like Avago or NVIDIA, also some of the other ones I'm not even sure what sector they're in, but these high flying ones this year, like Light or AAOI, things like that. What else? And then every once in a while I see the rotation. So I was playing financials a couple weeks ago, which was nice, and then now I'm back into the tech. So I'm just trying to follow along with the market as I can.
When you say buy the dip, define dip. What is a dip to you?
Well, a dip it depends on the market. That's a good question. It really depends on the market environment we're in. So right now, yesterday, there was the tiniest little sell-off in the middle of the day, which I would not call a dip under normal circumstances. But I decided to dip my toe into something because I was like, oh, look, it's on sale. But normally I would say, the last couple weeks when things were selling off, I thought that was a pretty good buying opportunity, and I I started buying Google down there, and I had some NVIDIA and my Facebook. So, it really depends. Like it's hard to know what the dip is going to be on a day-to-day basis. But I would say where we are right now, I would say probably in the next week or two, very small dips should be bought. Like I don't want to say I know 100%, but I really don't see a large sell-off coming. So I feel like if like Jenny Ellen says something today, or if there's some reason that the market drops a little bit today, just buy. Just like buy things that are going up.
Good
Not
strategy.
Like, buy things that are going up. Don't get anything on. Don't get like things like, in downtrends like the automobile industry or something like, the auto parts. Get things that are in uptrends.
We're on the line with Rachel Shasha. She's a trader and blogger at Sassy Options. Rachel, you mentioned that you're on the buy side of options here. And, how do you combat the time decay when you're going out? I mean, do you pick like a strike? Are you going out like right now, August, September? Or do you like to, to go a little bit shorter term and get those weeklies, or perhaps, playing the Julys, which have a few days of expiration?
Both, but I would say mostly weeklies. But sometimes I'll go real far out if I know that the play is going to kind of be hard, but I think that there could be a big move. But I just going to let it sit there. But usually I'll go shorter term, like 1 or 2 weeks, 3 maybe. So like this week, like I played Facebook Monday morning. I'm already out of all of it. So I did that one. So that's like a quick one. But, I had Google from last week and I'm still in it. So for like instance, I bought NVIDIA on Monday, and that one's not till actually 3 weeks expiration, because I think it has a lot of room to go higher. So I just kind of wanted to give it time so that I don't have to feel like I have to get in, get out. This way I can kind of just let it, what's the word I'm looking for? Mature.
Okay. This Bob is asking, are you buying out of the money? If so, how much? Well, we just talked about time frames, but are you trying to buy out of the money, or are you trying to, get the bang for the buck and go into the money?
No way. Out of the money is the bang for the buck. If you go in the money, I mean, unless it's like a $30 stock, I feel like it's very difficult to make money on it, and you can lose so quickly. I rather go out of the money where I think there's a lot of room for that stock to go, where you can really get your bang for your buck. Like I try to think about, when I'm entering a stock, can I make 3 times my money on it? If I think I can, I think it's a good risk to reward. If I don't think I can, then I move on. That's why I tend to not play the smaller stocks. I mean, every once in a while I do, but it's harder. It's harder to make money on those. But so for when I bought NVIDIA, it was like at, what was it on Monday? Let's say it was like around 140 or like
Monday,
like around, I don't know, 150. Let's say
Yep.
I was buying it. Yeah. So let's say around 150. I bought it like kind of early on. So I went and I bought the July 28th expiration 160.
Okay.
So I mean that's pretty far, but I think I think you can get back to highs, or at least to 160, and then if it gets to 160, probably I will sell some and maybe roll up into a different strike, or just sell some and hold the rest.
Do you ever
I mean,
sell?
it depends. Like I never do it. Like I never have it. Like I know people say, like traders say, oh, you have to have everything planned. Like if you have everything planned, I don't know how you're trading the market, because I don't. The market moves. You can't. How are you going to plan it?
Would you try and sell, like if it did rally up to 160, instead of selling out of your 160 and buying a higher up strike? Would you ever like try and sell like the 165 or another strike and try and lock in some profits that way?
I don't do that. I mean, look, that could work for some people, but it just starts to get too complicated. And then like, I don't know, and then I'm in like 2 positions and trying to manage them, and I don't know, it just starts to get like, I don't know, it just makes it complicated for me. I'd rather just like stick to the simple. I'm buying it. I'm going to sell it when I think it's time to sell it. Maybe I'll roll up, with some profits and just like let it go.
And I mean, selling options, is that just too much risk or not something in your repertoire?
I think selling options is great. I mean, the fact that I do open interest, I literally like know before the week starts, like about the kind of range stocks might be in, like certain stocks that pin well. And so, yeah, I think for people who love to sell options, that's a great strategy. But see, I'm active and in front of the screen all day long. And if I'm just selling options, I feel like I'm just going to be like sitting there, like twiddling my thumbs. And then, you know, when it starts to go against me, then I get a little nervous. And I just feel like if I want to be active, which I do, it's easier to be active if you're just buying and selling, you know, buying a call and then selling the call, not like selling calls, than sitting on your hands and like hoping it stays in that range. I mean, I think that's a great strategy. I really do. And, you know, maybe one day I will, you know, transition into that strategy. But for now, nah, I'm just into buying it and making my money and leaving.
Okay, let's talk about your methods of technical analysis here for stocks. Do you have certain technical formations that you like to see? You're trying to buy stuff on breakouts, looking for stuff. I mean, when you talked about buying the dips, you're looking for support. Tell us about your methods of technical analysis.
I use a lot of open interest at the same time as I use technical analysis. So I like things to line up. So here's an example. So Facebook has a lot of high calls this week at 155. Now, it doesn't mean it can't go over 155. It just means it's going to be a little bit harder and face resistance. However, if it can get over so I bought it, and when it got to like a little over 155, because I felt like it would overshoot, which is yesterday, I sold it. I mean, it's higher in the pre-market now, which is fine. But I think that there could be a chance for a pullback again under 155. And then if it gets to 155 again, knowing those high calls are there, meaning that's a lot of resistance it's getting through, then it's really strong, and I would buy that breakout. So I don't always use open interest, but I feel like it's very helpful. Instead of just looking at the chart and being like, oh, it's breaking out, I want to know, is there a lot of room for it to go? Or is, you know, a lot of people are going to be selling their calls and market makers going to be closing the calls out, and then, you know, it's harder. Now, like I said, if there's a high strike and the stock can get to that high strike, over that high strike, then pulls back and can do it again, then it's really strong.
One more question for you, Rachel, before we let you go. When you're a graduate of both UCLA and USC, you studied the psychology of the market. And boy, oh boy, describe the psychology here in the market, very, very low volatility. You know, what kind of factors are going to change the psyche of investors?
I mean, I think it's very hard to control your own psyche, but I think the psyche of investors is just, there is some complacency, but the thing is I know everyone keeps saying, oh, it's so complacent, but it's not 100% complacent, because I feel like as soon as we get like the tiniest dip, people freak out and call the top. So, I mean, that to me does not sound super complacent. Maybe it's complacent for like a stretch of like a week or two where everyone's just buying calls and, you know, the call to put ratio is very high. But then like 0.5% sell-off happens and everyone's like, oh my God, that's it, it's over.
Goldman Sachs indicator. I got to stink that in there. Anything in your Goldman Sachs indicator?
It's not my indicator anymore. Not for now. Ever since they bombed it on earnings, it just sucks. So I don't even use that. I mean, to be honest, anything like if financials are moving, I would use like JP Morgan versus Goldman Sachs. Maybe that will change again. I hope it does, because it was a great indicator for me. But for now, it's just, you know, it's sleepy.
All right.
But I will say, if it gets over what is it?
230.
233.
Yep.
If it gets and holds over that, just buy it. It's going to go to high.
All right, we've been on the line with Rachel Shasha. You can find her writings and musings and trades on sassyoptions.com is her site. Rachel, thanks so much for hopping on today.
Thanks for having me.
8:28 now. Joel, what's up in the market? Anything new?
Well, no, we're hanging here at 24.28, but John Dodson here is talking about a stock that I don't know if we got our article out on it yesterday. Dennis and I were discussing it here in the pre-market. Ulta. One Ulta ugly chart here, Dennis. John Dodson's stepping in. He thinks this thing's a little bit overdone. You mentioned PEs, Dennis, when we talked about this on the pre-market show.
Valuation doesn't matter until it does. And you'll see stocks that, you know, just go up on momentum and, you know, you can do whatever you want figuring out valuation. It doesn't matter at all. When momentum starts to break and when we start to get a break in the charts, that's what people start to look at. When they start looking, they're like, whoa. And you can look at Ulta still trading with over 30 multiple, and you think, it looks expensive to me. I mean, because it's really, a lot of times, and not in all cases, like Tesla, you can't even use valuation at all because it's just on momentum. It's just on potential of Musk more than anything. But when you're talking, retail companies, and something even like I would compare, like an Under Armour before, and it started breaking. Everybody's like, wow, it looks cheap at 30 because this was at 45. But if you look at the multiples, you're still saying, well, a lot of times when the growth starts to slow, well, you've got two types of major investors in the market. You got growth investors and value investors. Well, if the growth investors all of a sudden are starting to not buy the stock because growth is slowing, now you're relying on the value investors to find your support. There can be a gap sometimes, a large gap between growth and value. So if a stock is starting to slow in growth and eventually trying to become a value stock, you need to start looking at things like multiples. And value investors don't jump into companies with multiples of 30 and 35. And, and that's why Under Armour has had a struggle here to come back as well. Is it a good company? Yeah. Is it still, got a good brand? Yeah. But it's struggling with its multiple now because the growth investors aren't there and the value investors is still a little bit expensive there. I would say Ulta is the same thing. I think it's stuck in between here right now. If the growth starts to come back, growth investors will start to get interested again. But the couple, a little bit of, growth slowing and value investors are got a ways to go here when the multiple's over 30.
All right, John. I don't know. I mean, it's definitely, you could say this thing's, overdone. You've really fallen off the 290 level. Just looking at the charts here, I don't know, man. Do you think they want to clear out some of those stops at 250? You had some lows back in November at that 250 area. So, I mean, there's some momentum here. Another thing that you got to contend with here, if, in fact, this thing gets another rally, just like the S&Ps, and we have a good 830 number there. S&Ps have just popped. We are at 224.30.
Yellen starting.
Yellen, talking up the market.
Yeah, we're bouncing a little bit, couple points here. And balances came out too. They're small. I don't see anything jumping up from a bounce land. Alibaba, your typical buy and bounce. Seems like every morning 25,000 shares to buy. U.S. Steel. We haven't talked about U.S. Steel for a while. Symbol X. And it sets up kind of, interesting as well. I know Rachel, and, I didn't get a chance to chime in on with Rachel there when she was saying that Goldman Sachs 230. I'll give her that level, man. That Goldman Sachs 230, that level's absolutely enormous from the last 4 months. And I agree, if it gets over that, it's probably could see 240s. So there is sometimes some really nice technical setups. U.S. Steel is trying to do a similar thing. I mean, it's not as pretty as the Goldman chart, but, if you were to get up there over those couple highs, instead of 2330, there is a lot of air above here. So, you look at this one, you think, there's actually some people starting to come in, starting to try to form some type of a bottom. But I don't want to jump in here until, I have some confirmation where it's breaking out through the highs. But if it was to get up to over 2330, I think I'd get interested.
Yeah, I mean, you have your out. If you're looking at this a longer-term trade here, you did spend some time under $20. You come off that 41.83 high. Believe it or not, folks, that was back in February. 2-for-1 stock split, so you have your out on the downside. Once you get, you can mention those 2330 highs, and I look at that high from earnings day when you had the big gap down in X. So I don't think your shorts are gonna, get to be, too nervous until you clear. I believe it was 24 and change. Let me get you an exact number. That high on earnings day was 24.37. Then you get in the whole gap area, but at least you got it out if you're trying taking a stab here at the 22.30 area.
I'm not listening to Yellen, obviously, because we're doing the pre-market show live, so keep us updated. Jimmy A is saying that Yellen's a little bit dovish in her talk right now there. So, keep an eye on your financials. Those are the ones that seem to move the most. I can look at Bank of America, which, before 8:30 was actually trading up a little bit higher. It's starting to leak here a little bit right now, though. Citigroup, JP Morgan, which were up pretty significantly in the pre-market, are starting to leak as well. So maybe she is starting to get a little bit more dovish there. If you're just talking your TLT, it's actually lifting a little bit here, which usually moves opposite to the financials. So keep an eye. Your banks are usually the most sensitive to what Yellen is saying. We got 1 minute here before our next guest. Just quick look at upgrades, downgrades. NVIDIA catches an upgrade from SunTrust. We've got HOG HOG, Harley Davidson, getting downgraded at Bernstein. FCX cut to sell at Berenberg. Those are the three main ones that I see there. I mean, we could talk NVIDIA. NVIDIA almost doesn't seem to matter if it gets upgraded or downgraded. It just does its own thing. It's all about momentum there. I mean, the odd upgrade, they still matter. But, I mean, I'm looking this morning, and you can see a stock like AMD trading up actually more than NVIDIA. And NVIDIA is the one that got the upgrade.
All right. One quick stock here, DRWI. Frankie, 23, is looking at it. It's a small cap, noting a nice run up in the earnings. Dragon Wave, a dollar stock. So, Frankie, I can tell you, if you're buying here at $1, the most you could lose is $1. See if you get some good earnings. Looks like you got some air up to 150. If it can clear ahead. You had one other high over $1. Let me see. This is the lower price one. Just let me give you that other high that I'm looking at above $1. And that high is
just big psychological level of buck.
Yeah,
I mean, you can go and
$1.15.
stare, but these things, when you start getting these penny stocks, they're all moving on headlines too. So, it's tough. You can say you can trade anything technically, and you can, but, a penny stock is so prone to, one bad headline and boom, the thing could be at zero on you, or, down 50%, a good headline, the thing can pop 50%. So that's why the penny stocks, speculative capital only.
All right. 8:35. We're going to take our second and final break of the day and grab Morad Askar, a.k.a. Futures Trader 71. That is his site, futurestrader71.com. So we'll be right back with Morad.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Condon, along with Dennis Dick and Spencer Israel. We have Morad Askar on the line. He's a futures trader. You may know him as futurestrader71.com. Morad, how you doing today?
Good. Glad to be on.
Okay. So where'd you get the 71 from?
That's actually a very uncreative way to come up with a handle. I created that back in, I think, 2004 on EliteTrader.com. The 71 is my birth year.
Okay.
35 years old.
All right. So let's talk about the markets. I know you like to follow the S&P 500 index futures here. And, we've had some rallies. We've had some dips. I know you like to keep an eye on the first, the early brackets of trading. Just give us your observations here, just, the overall trend in the market and opens and closes.
Okay. Overall, I have to say that trading the E-mini futures has been, has gotten tougher, fewer opportunities recently. because we're in a rally market. But overall, what I'm observing here recently is that there's more and more and more talk of, hey, this is topping out. This is not pushing any higher. But to me, this has just been balancing out. We've spent the last month just sitting at these prices near highs, near all-time highs. And if for those of you who trade this product, you may have noticed that for the last few days on a daily chart of the pit session only, you'll notice that we keep dropping and then closing somewhere around the 2420. If you draw a line across 2420 in S&P futures, you'll see a lot of closes and a lot of openings around that price. And now we're pushing into the 2435, which is a key target. This has been a key target for about a week. We're getting up there now on those yelling comments. So to me, there is nothing here yet to get excited about as far as the sell side, as far as the short position. I think this is just this keeps getting bought every time it drops. The overall PE ratio for the S&P is climbing. It's up there, but it's not 45 or something that's kind of out of whack. I think this still has room to go up. So I think those who are getting excited about the little sell-off like we had yesterday on Trump Jr.'s news, they're going to notice the same thing. Every time there are bidders and there are buyers that are likely to bring it right back, and it ends up back in the 2420, 2425 area. So there's not much to do but to fade edges, and it's been so for a couple months now.
Fade edges. Are you talking like today? Would that be you be waiting for the 2435 area? Is that define an edge to us?
So I work heavily with statistics and distributions and things like that. When I say fade edges, essentially what the market is doing is it's pushing in one direction, it's advertising prices in one direction, let's say to the upside like it is now. Then what I see it doing is pushing into an area of importance to me right now. As I said, 2435, 2435.50. It's likely to stretch that a little bit to say 37 or so. And I'm monitoring how it's behaving on the buy side. How are the buyers doing? Is the offer reloading, things like that. And then as soon as it starts to fail, I will sell back into that 35 area and beyond to 33 or so. And take off much of your position. I'm looking for, 2 to 4 points, 2 to 4 handles in the S&P per trade. I'm not really shooting for the moon or anything like that. And it's I call it also outside in trading. So it's like a rubber band. It's the old, in the old days, it's like the Bollinger trade. When the market kind of pushes in one direction without really being a trend, push in one direction, and then I start to go against that and then go the other way. But I don't fade. I don't pick tops. I don't pick bottoms. My approach is for anybody who's watched Trader Bite every morning at 9 a.m. I look for the market to tip its hand. I want to see which side is putting the pressure on, which side is dominating. Are there higher time frame participants in here, meaning bigger players pushing the market, in which case you don't fade them, things like that. And there are a lot of clues that appear as the market opens, within the first hour to give us an idea of who's in control. And once it starts to fail in one direction, I look for that failure pattern, and then I go the other way. Usually a lower top on size and things like that.
Talk to us about the Dennis. You hopping in there?
Yeah, I was just going to say, I just want to ask you a little bit more expansion on that. How has the market, you've been trading for a while here, how has the market changed really with the, high frequency trading? Because obviously there's a lot of noise in this market now, and the noise can chop a lot of people around as well. How do you not get chopped out by the noise?
So, it's the high frequency trading. So there are different levels of computerized or robotic trading, algos and things like that. At the end of the day, the market is moving based on a human factor, based on somebody's assessment of what value should be. Okay, so I'm a value trader. I'm looking at volume profiles, and I'm looking at how it's moving and what shapes it's forming in the profile. So in the end, somebody somewhere is saying, okay, this is getting too cheap here. We expect it higher. Let's go buy it. And then they get their desk to do it using an algo, and that's counted as an algo trade. And then a whole bunch of machines kick in after that that read that using whatever metric, moving average, buy-sell pressure on the underlying, all of indicators. Then those machines kick in, and then you have predatory algos that go in there and just hunt for stops all day long. There's a lot of that. So there is an awful lot of noise. And I used to trade at that level, by the way. I used to trade, even when I was trading equities heavily, I was trading for teenies, and I'm looking for that buy-sell pressure and quick in and out. That hasn't worked. That stopped working around 2005, 2006. It became really hard. I mean, I ran an entire prop shop that's all I did. That's all we did. We just played the flow of order flow of the market. Now that's dominated by computers. So my approach now is to look for context. Read the story. It's kind of like I like to say, it's kind of like walking in the middle of the season of The Sopranos and trying to figure out who the main players are, what's driving them, things like that. Then once you establish what the big is, then you start to look for nuances on a day-to-day basis. So I come in every morning, I look at what did we accomplish yesterday. Yesterday we took out, Monday's low, we took out Friday's low, we bounced right back up. There was really low volume on the bottom, at the bottom side. So yesterday, on that news, we put in a really good, strong, what we call an excess low, and we came right back and we closed right on top of the open. And we've done that over the last few sessions where we close above the open, and the market's not to hold down prices. So unless something dramatic happens, so my mindset's to come in and say, okay, my primary hypothesis today is to know that we're gapping up. Right now we're gapping up. We're trading 24.3250 in the S&P minis. We closed yesterday at 24.50 or so. So we're gapping up. So if I come in here and I don't see sellers coming in hard and selling it on the open, I'm waiting for it to create a foundation intraday, because I'm an intraday trader. Looking for it to create a foundation, and then I'm buying. I'm lifting the offer, and then I'm taking some off, and then on pullbacks, I'm lifting again and taking something off, because it is very likely not to close that gap today. We haven't closed gaps down for some time now, and it's likely to keep pushing up. And the target today will be 24.4050. That's a triple top. It's a weak high. This is what I'm going to be looking for. So I come in not trying to fight at that nanosecond level. That's not my game. My game is to see the big picture, figure out what is likely to happen, wait for the market to say, hey, we've selected plan number 1 or plan number 2 or plan number 3. I have my targets, and I look for an area to get in and push in that direction. So the market tells me what my bias should be, but the story tells me what could happen, kind of like a battlefield view versus being in the trenches once the market opens.
Real quickly, at the top of the interview, you mentioned the intraday chart versus the Globex market. How do you interpret the action from the after hours and pre-market trading to set your plan for the day, or you trying to execute trades during the off hours?
Okay, that's a great question. So because the futures almost 24 hours a day, I do pay attention to what happens overnight, but once the stock market opens, I'm not looking at the overnight session. I'll give you, the overnight session trades about 112 to 140,000 contracts in the S&P minis. The day session will trade 1.1 million. So the volume tells me a lot. So I want to pay attention to what's happening overnight, because the S&P mini is trading in sympathy with the rest of the planet overnight. So the underlying equities, the 500 stocks, are not in their prime market. Their dealers and market makers are not active. The arbitrage is not active. So it's moving in sympathy with Asia, then it's moving in sympathy with Europe, and maybe it's moving on news at the 8:30 numbers that come out. So I pay attention to that. I look at what's formed overnight. What kind of a shape of a profile do I have? Where did the most of the trading happen? What did it try to do? What is it trying to do? How good of a job is it doing? That sort of stuff. But once I know what that is, it's off my charts. I don't really care about it. I'm only looking at the day session because that's where, the underlying is kicking in, and the product should be tied to the underlying, step for step. So I try to eliminate that noise. I consider that noise somewhat, but a lot of people will watch a 24-hour VWAP or a 24-hour price action. I in my experience, I've been doing this for 17 years now. It just adds noise that's not necessary, because to me, price is great. Price with volume is the story. You could have price move. You could have a stock jump up, $3, but if it's happening on one lot print, that's not really telling you anything. But if it's happening on, a million shares, then that's saying, hey, this is something serious going on. And it looks like we're really running up here. Wow, 24.36 already.
Morad,
Yellen had some good news for us.
Last question, and we'll let you go. You have a morning show yourself. I think it starts at 9. It's called Trader Bite. Real quick, how can people watch that? So the best way to watch it is just to go to youtube.com/FuturesTrader71, and on that page, if you subscribe to the channel, you'll get a push notification telling you when the next show will be. But it's always happening in the same spot. You can also catch the announcement on Twitter. I send out an announcement 1 minute before it starts and about 15 minutes before it starts on my Twitter feed. That is twitter.com/FuturesTrader71. And it happens pretty much every day. And I'm basically opening up my book to show here's what I saw yesterday. Here's what I said yesterday would happen. Here's what actually happened. Here's what I think the reasons are. And then here's what I'm looking for here's the story for today, and here's what I'm looking for today, and so on and so forth. So it's like it's a continuous story. It's not a hindsight 2020. Here's what happened. Here's what I did. It's more of, this is how I see things right now. These are the actions I'm likely to take, given ABC, and then come back the next day and say, here's what actually happened versus what I expected, and just carry that forward. And it's really not about telling people how to trade or what to trade, or what trades to take. It's about showing people a very, very strong core that I think is important for every trader. It's to have a routine and to follow that routine religiously, and to be consistent and not have every little thing influence how you approach the market. There's got to be a plan. It's got to be your own. You got to repeat it. You got to own it. And then I'm showing it transparently every morning, and that's what that show is about. And that's what we preach here as well. Morad Askar, thanks so much for joining us today. We will definitely have you on again soon.
Thanks a lot for having me.
All
Take care.
8:52. What's going on? Yellen got some news.
Yeah.
Yellen. What'd she say?
She's saying
She's saying good things.
buy the S&P futures. It's going to 2,500 now.
She's saying something. Financials are beat. The financials got, because you're gonna look when they're trading up, over, buck on the SPY. You think everything's gonna be up. The banks are down. J.P. Morgan's trading down 23 cents right now. Citigroup's trading down at 66.62. It just ticked to. And then Bank of America's trading down 12 cents at pre-market. So you got the banks taking some heat. You got the TLT popping here. XLU is popping here. So obviously she's saying something here that is, hinting that interest rates may not be going up in the near future.
I can't get a read on this Fed. I really can't. I mean, because if you go with the the jobs number, I mean, it seems like one way they're saying, oh yeah, rates are going up for sure. We're going to unwind the balance sheet. This is the way we're going to do it. And then now, from interpreting their testimony here, it's like, oh yeah, we're going to unwind it, low inflation, but we're going to take our time doing it. So really really catering to the market here, I think, is really my interpretation.
Well, that's always the way. They always cater to the market here. I mean, let's look at what's happened over the course and get some context here. We just had a great interview with Futures Trader 71, and saying it back and let's read the whole picture here because so many people do get caught up in the noise. And, he gave us some great insight there. Stuff that we say on the show as well. I've been in the business since 1999 too. I see a lot of the similar things that he sees. I used to be a scalper. I used to be a market maker. And you were as well, Joel. I mean, it's changed now. That game is, driven by high frequency trading now. So you got to get a different game. And the different game is, reading the big picture here. So let's go read the big picture of what's been happening here over the last month. Banks have been flying up. You've seen JP Morgan go from 88 to 94. You've seen Bank of America go from 22.5 to 25. Exact opposite of that has been the TLT, which has been going straight down, 128 to 123. So you can see people have been betting that interest rates are going to continue to go higher. If she's dovish here this morning, some of that bet's going to come off. And that's what we're seeing right now here in the pre-market. So you're seeing the banks show a little bit of weakness. You're seeing the TLT show a little bit of strength. You're seeing the utilities, which have been absolutely murdered. I mean, you look at a stock like Southern that has went from $52 3 weeks ago to $47. You can say, oh, $5 fall 10%, whoop-de-doo-dah day. NVIDIA moves 10% every day. Well, that doesn't, that isn't a utility stock. Utility stocks are usually slow. They don't do much. They move a buck here, a buck there. But really overall, it's a 5-point sell-off here in one of your biggest utility stocks in the last month. That is a significant move. So if you have some people that, decide all of a sudden, whoa, wait a second, maybe interest rates aren't going up in the near future, you could see some buyers pop into something like this today. And you could see, some of the shorts get squeezed on it too. So I look at that, I look at some of these other things. Now, I'm not listening to her because I'm doing the live radio show. So I'll have to analyze, obviously, after, I get off the radio show here in 4 minutes of what exactly was said. But the market, it doesn't usually lie. And it looks right now that the market is somewhat concerned that interest rates or that the financials are somewhat concerned that interest rates aren't going up in the future. And the market's liking it.
Liking it in a big way. We hit 36.50. That matches our 6-day high. So that's one potential area. Morad also mentioned a couple highs at the 24.40 area. So that's another potential target. But right now, current high 36.50. Dennis, we got about 4 minutes here. We did just touch on some ratings here. Is there any that we missed?
No, there's all kinds of other stuff, so let's ignore the ratings because there's not that much, in ratings land here. Obviously, the big movement here that I've been talking about here is the financials that are moving down. But I'm looking at, some imbalances here. General Electric is 101,000 shares to buy here this morning. Stock has been beat up. It's got a big dividend. Remember this, folks, and it had a little bounce there yesterday. So, I look at a stock like GE and think, could it have a 2-day move here up to 27? Yeah. I think it can. I think it was overdone when it got down to 26 there. Everybody's hating on it there. It's still 3.62% yield. Stuff with a nice dividend might actually, catch a bid here. If this continues to hold and doesn't say something else. I mean, you got to watch what she's saying. She changes her tone a little bit or says something else. The market could get spooked here anyways. But right now, you got to look, market's up. What's going to go up? It's not going to be the bank, so it's got to be something else that's going to go up. You can see the Qs are taking off. So stocks like NVIDIA, which is upgraded today, is going to be lifting here. You can see, Microsoft, Apple all catching a bit. So tech looks like it's going to be okay. But, there might be some bids coming into some of those defensive yield names there. And that's why GE is one of those. AT&T and Verizon are two other ones that I would look at as well. Both of those are trading up pre-market. They have not been able to catch a bid at all. Verizon has been straight down here for a month. I mean, really for 3 months. We were $51 back in March. We are now $42.89. You're down 20% almost here in Verizon in the course of 3 months. An astronomical move for that issue. There's some people short this thing this morning, probably saying, ooh, 5.36% dividend if interest rates aren't going up anytime soon. Maybe, I should be covering that short. And not only that, you might have some value investors saying, hey, if interest rates aren't going up anytime soon, 5.36% dividend looks attractive. Those are two stocks I'm looking at today, too, now.
All right, a nice tweet here from Sven Heinrich, and just popped up. I was trying to explain, my thoughts on the Fed, and he says, last week the Fed is worried about markets overheating. This week, Janet's ready to introduce QE4 at any sign of trouble. So hard to get a read on the Fed here, but fighting the tape in this market has not been very fruitful. 36.50, your pre-market high. Dennis, you talked about where you're looking for buyers and perhaps some of these dividend-paying stocks. The oil did get off the low, trading up 89 cents at 45.93, and gold and silver catching a bounce too. So
big bounce, gold and silver. We haven't said that yet.
Yeah.
Obviously, they're interest rate sensitive as well. Gold, silver catching a big bounce.
Okay. All right, Spencer.
Dennis, any more imbalances besides GE?
There's not a lot of standouts. It's early here yet. You know what? And institutions, when they're yelling is talking, aren't going to show their hand right now because they're still listing. So they aren't placing their orders in there yet. So it's not surprising that there's not much showing up here yet. 920, you're going to see a lot more. But I do see GE. I see some of the financials starting to form. Bank of America, 30,000 to sell. So you can start to see some clear separation here in the stuff that I was just talking about. BK, another bank, 41,000 to sell on that one. So I think that's where you're going to see some weakness there. Other ones are all pretty small here yet, Spencer. It's probably because Yellen's talking and the institutions aren't putting the orders out there yet.
All right, fair point, fair point. Looking ahead to tomorrow's show on the docket for Thursday, we're going to hear from a couple of guests we haven't had on in a while. Angie Setzer of the Citizens Grain Elevator, maybe our go-to commodities expert, and then Jeff Hirsch of the Stock Traders Almanac will join us. So a good show for you folks tomorrow. If you missed any part of today's show, you can catch our podcast. It's on iTunes, SoundCloud, and Stitcher. Find it by searching for Benzinga or for PreMarket. You can also replay the whole show and listen to it live on youtube.com/Benzinga TV. If you subscribe, you will get a notification as soon as the show starts every day, and the podcast will be up in about an hour or so. Don't forget to like us on Facebook, follow us on Twitter, and sign up for a free trial of Benzinga Pro. You can get it for free for 2 weeks. It's Benzinga's real-time news platform that Dennis, Joel, and myself are using during the show, so don't forget that. That's it for us, though. Have a good rest of your day, folks, and we'll see you on Thursday.